Hey everyone, welcome back to Corporate Decoder, where we break down the business world so you don't have to a little bit of accounting magic and a whole lot of corporate speak to go through today. Let's just say someone had a busy quarter, alright, before we dive into Stagwell Inc. Its latest financial report. If you love getting clear, unbiased insights from these dense SEC filings, make sure you hit that subscribe button and consider joining our Discord community, linked down in the description below. We've got a great group discussing these things already. Stagwell Incorporated is back with their quarterly report looking at the period ending the 30th of September 2025. And boy, do they have a lot to unpack, especially when it comes to their revenue and how they slice and dice it. Let's kick things off with the top line revenue for the 3 months. Ended the 30th of September 2025, hit $742.9 million. That is up from $711.3 million in the same period. Last year, a decent jump of about $31.7 million or 4.5%. But here is where it gets interesting when we look at net revenue, which is revenue minus what they call billable costs, which are essentially costs passed through. It shows a bit more growth. The net revenue for this period was $614.5 million, up from $580.2 million. Last year, this is a $34.3 million or 5.9% increase. Looking at the segments, marketing services really showed some muscle, bringing in $297.2 million. That is a significant 11% increase from last year, mostly thanks to new clients and more spending from clients in retail and financials especially. Digital transformation also saw good growth. Their revenue was $103.7 million, up 17.5%, mostly from new projects and increased client investment in communications and consumer products. Media and commerce had a bit of a mixed bag. Revenue here came in at $174.7 million, up 9.5%, but their profits took a slight dip. Their operating income decreased by $799,000. Even though net revenue grew, communications saw a noticeable drop. Revenue here was $144.9 million, down 21.5% from last year. This looks like a normal post-election season slowdown after a busy 2024, particularly in their advocacy business. And the marketing cloud, that is their technology solutions segment, it exploded. Revenue surged by a massive 137.6% to $27.2 million. This segment is clearly a big growth driver. Acquiring new businesses like Leaders and Uniceptor really boosted this up. Now let's talk about profitability. Operating income for the company overall was $60.9 million for the quarter. That is a very strong 45.8% increase from last year's $41.8 million. What is also encouraging is their adjusted EBITDA, a measure that strips out certain time cost. It came in at $114.6 million, up 3.1% from last year. This suggests their core business operations are performing well, despite some cost increases. Looking at the bigger picture for the 9 months ended the 30th of September 2025, revenue reached a substantial $2.1 billion. That is $49 million or 2.4% more than the same period in 2024. And that net revenue saw a healthy 6.6% increase to $1.78 billion, driven largely by acquisitions and organic growth in most sectors. Marketing services continues to be a powerhouse for them, generating $839.5 million, a growth of 7.3%. And importantly, their operating income here nearly doubled year over year to $93.3 million, a massive 74.4% increase. This is where they are really flexing. Digital transformation also performed very well. Revenue increased 17.4% and operating income jumped a massive 61.4%, showing strong execution in this area. Media and commerce, however, is seeing more of a challenge. Revenue decreased 8.1% and operating income dropped by a significant 52.3%. This segment might be facing some headwinds or strategic shifts. Communications also experienced a revenue decline of 11.3%, but their operating income decreased by 35.6%. This segment seems to be navigating a tougher market, perhaps a natural cooldown after significant political work in 2024. And the marketing cloud, that tech-focused segment, it is just soaring. Revenue shot up by over 200% to $78.8 million. This is clearly a star performer, showing explosive growth. On the balance sheet, total assets are up to $4.26 billion from $3.9 billion. At the end of last year, a good chunk of that increase in assets is in goodwill, reaching nearly $1.6 billion. This indicates they have been busy acquiring companies. Their liabilities are also growing, with total liabilities at $3.48 billion accounts. Payable alone sit at $408.1 million. Shareholders' equity at $770.5 million is fairly stable, but it is interesting to see the increase in paid in capital, indicating recent stock issuances or contributions. Now let's look at the cash. For the 9 months ended the 30th of September 2025, they generated $30.7 million in cash from operations. That is a big improvement from a negative $69.2 million last year. This suggests better cash management and a stronger underlying business performance. Investing activities show they used $80.8 million, mostly on capitalized software, and general capital expenditures consistent with a growing tech-enabled services business. Financing activities show a decrease in cash provided, which is mostly due to paying down debt and buying back shares, which is generally a good sign for shareholder value. Debt-wise, they have $1.1 billion in 5.625% notes outstanding. This is a pretty significant chunk of their capital stack. And speaking of debt, they are managing it well. Their total leverage ratio is 3.45, well below the 4.25 covenant limit. This shows they are not over-leveraged right now. One thing to note is their stock-based compensation expense, which is quite high at $13.1 million for the quarter and $44.1 million year to date. This is common in service industries to attract talent, but it does dilute shareholder value over time. Class A common stock is around 254.3 million shares outstanding. They also completed a major move in April 2025, exchanging all Class C shares for Class A shares, which simplifies their capital structure and removes a lot of non-controlling interests. Scroll first. Let's talk about the company's overall direction and strategy. Stagwell is clearly pushing hard into technology and data integration across its marketing services. The explosion in the marketing cloud segment is a major indicator of this. They are actively acquiring companies like Jet Fuel, Create, and ADK to bolster these capabilities, which is a smart move in today's market. However, the decline in media and commerce and communications revenue signals that not all parts of their business are firing on all cylinders. It looks like they might be re-evaluating or restructuring parts of their portfolio, which brings both opportunity and risk. The most notable risks for Stagwell seem to be tied to their reliance on acquisitions for growth and the integration challenges that come with them. The significant goodwill on their balance sheet means they are betting heavily on these acquisitions to pay off. Also, while their debt is currently manageable, any significant downturn in the economy or their ability to service that debt could be a major problem. A key opportunity lies in leveraging their technology-driven segments like the marketing cloud to create more integrated and innovative solutions for clients, potentially capturing more market share. In conclusion, Stagwell is navigating a dynamic market with a dual strategy of organic growth and strategic acquisitions. They're showing strong performance in key areas like marketing services and their tech segment, but some legacy businesses are showing weakness. They're managing their debt well for now. But continued integration success and organic growth across all segments will be crucial for long-term health. Alright, that is our dive into Stagwell's latest financials. What does this all mean for the future of the company? Let us know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more deep dives into the corporate world. And as always, the Discord is linked in the description if you want to continue the conversation. Thanks for watching, and we will see you in the next video.